The following draft balance sheets are given as on 31st March 20x1. In lakhs of rupees, they have given us the balance sheet of Best Limited and Better Limited. We are given share capital. Shares are of 100 rupees. Reserves and surplus, other liabilities. On the asset side, we have fixed assets, investments, and current assets. There are no investments in the Better Limited's balance sheet, but investments are there in Best Limited. Okay, what is the additional information? They are saying Better Limited issued bonus shares on 1st April 20x1 in the ratio of 1 share for every 2 shares held. So 1:2, that's the share, that is the bonus ratio. It was agreed that Best Limited will take over the business of Better Limited on the basis of latest balance sheet, the consideration taking the form of allotment of shares in Best Limited. So Best Limited will take over Better Limited. So Best Limited is turning out to be the purchasing company, while Better Limited is turning out to be the selling company. In C, they are saying that the value of the shares in Best Limited is considered to be 150. So for Best, it is 150. And the shares in Better Limited were valued at rupees 100 after the issue of bonus shares. So this value is 100. The allotment of shares is to be made on the basis of these values. Liabilities of Better Limited included rupees 1 lakh due to Best Limited for purchases from it, on which Best Limited made a profit of 25% of the cost. Okay, so there seems to be some transactions between the purchasing and selling company. See, right now the two companies are separate companies, so it is very much possible that the two companies are doing transactions with each other. Now, if any amount is outstanding, then one company will show this as current liability, that is a creditor, while the other company will show it as an asset, that is a debtor. And then they are saying the goods of 50,000 out of the said purchases remain in stock on the date of the above balance sheet. Okay. This is one information that we will discuss at a greater length later. Right now we are ignoring it. I will come back to it later. They are saying make the closing ledger in the books of Better Limited. So selling company's ledger is to be prepared. Obviously, you cannot do ledger posting till you do not know what are the accounting entries to be recorded. So yes, accounting entries definitely are important. Then they are saying opening journal entries in the books of Best Limited and prepare the balance sheet as on 1st April 20x1 after the takeover. So three things are required. Ledger of the selling company is required. Journal of purchasing company is required, and so is the balance sheet of the purchasing company. Step by step, we will have to work out each one of these. Right. First of all, let's give the effect of the bonus. Information A is in 1:2, we are issuing bonus. If you see, they have given you 10 lakhs in the selling company and shares are of 100 rupees each. So 10 divided by 100, that means there are 0.1 lakh shares, right? I'm taking figures in lakhs, so 0.1 lakh shares are there, and we are going to issue further bonus shares. So that is the first thing that I want to put over here. I say number of shares after bonus in Better Limited, right? That's the selling company. In Better Limited equals to 0.1 share are there plus 0.1 into the bonus ratio. This is turning out to be 0.15 lakhs. So these are the number of shares which are there in the selling company. And if you see now the way we are going to determine the purchase consideration, in information B, they are saying we will take over the business of Better Limited on the basis of latest balance sheet, consideration taking the form of allotment of shares. So Best Limited will take over Better Limited by issuing its own shares. Now, how will I issue those shares? In C, they are saying Best Limited's value is 150 and that of Better is 100. So in a way, this is giving us a share exchange ratio. So I will like to work out the share exchange ratio. So I say share exchange ratio is equal to, right? We have to take the base of the selling company, right? So we say value per share of selling company divided by value per share divided by value per share of purchasing company. Okay, understand, this is better and purchasing company is best. So it is turning out to be 100 divided by 150. So that is 2 by 3. So share exchange ratio is 2 by 3. So this will give me the purchase consideration now. So I say determination of purchase consideration. Right? We can work out the purchase consideration now that we have the share exchange ratio. So I say particulars. It's one of the main workings that we are going to do. Amount, we are taking figures in lakhs right now. Okay. We are going to settle the purchase consideration by issuing our shares. So we say to equity shareholders. We want to know what are we giving to the equity shareholders. We know after the bonus there are 0.15 lakh shares, isn't it? This I will multiply with the share exchange ratio, which is 2 by 3. So that is giving me 0.1 lakh shares. These are 0.1 lakh shares of Best Limited. And value of one share of Best Limited is 150. So 0.1 into 150, purchase consideration is turning out to be rupees 15 lakhs. So I'm getting 15 lakhs as the purchase consideration. Yeah, this is good enough for us now to prepare the ledger. Okay. If you see the asset side, you have fixed assets and current assets in the books of the selling company. And then you have share capital, reserves and surplus, and other liabilities. You will have to prepare accounts for each of them and close the books. So we give the heading ledger of Better Limited, right, which is the selling company. For all the different items which are there, we will prepare the ledger. So we say first fixed assets account, right? I'll prepare the fixed assets account. Say here to balance brought down, check with the balance sheet. Fixed assets are 15 lakhs. See, fixed assets will be transferred to the realization account. Your accounting entry will be realization account debit to fixed assets account, to fixed assets, right? So it is getting credited. So I'll say by realization account 15. So that closes fixed assets. Investments are not there in the selling company. So I take the next one. I say current assets account. Same way, current assets account. We say here to balance brought down, right? As per the balance sheet, it is 5. This will also be transferred to realization, right? We had discussed this in one of our earlier episodes, the journal of the selling company, by realization account 5. All the assets will be transferred to realization account. Your accounting entry is realization account debit to fixed assets to current assets. So that is what I have posted over here. Next in the line is now the liabilities account, right? So you can say liabilities account or you can say other liabilities account. It is fine. Liabilities will have a credit balance. So I say by balance brought down, it is 2. Then we say to realization account. Right, this will also be transferred to realization. It will close the account. Your accounting entry is liabilities account debit to realization account. Right. Yes, we prepare one of the important accounts now, and that is the realization account. That will be one of the important accounts that we will have to prepare. So realization account. Yes, the accounting entries that we have recorded till now, we have said realization account debit to fixed assets account. Realization account debit to fixed assets account. Yes, to current assets account. Keep on posting it. To current assets account. 5. Yes. Liabilities account debit to realizations on the credit side by liabilities account. Yes, which is 2. So the work that we have done till now is we have transferred the assets to the realization account. We have transferred the liabilities to the realization account. Your third accounting entry should be relating to the purchase consideration due, right? And for purchase consideration due, your accounting entry will be purchasing company account debit to realization account. Purchasing company account debit. Purchasing company is Best Limited. So I also prepare now an account for Best Limited, right? So we say here Best Limited account debit by to realization account. So realization account is getting credited. So I'll say here by Best Limited account, and our purchase consideration is 15, right? So that will be the case. While here I will say to realization account, right? So I'll say to realization account 15. So Best Limited account debit to realization account. So that has been posted. My next accounting entry will be to settle the purchase consideration. How will I settle the purchase consideration? What accounting entry will I record for the same? We are going to receive equity shares. So equity shares in Best Limited account debit, right, to Best Limited. So I'll say here buy shares in Best Limited account, which is 15. So this account gets closed. And yes, I do have a new account now. I'll say shares in Best Limited account. That is the account that opens up now. I say here to Best Limited account, which is 15. So what is the work completed till now? Assets have been transferred to realization. Liabilities have been transferred to realization. Purchase consideration due accounted for, and settlement of purchase consideration also accounted for. Now it is the share capital. Preference shares are not there in this question, but share capital is there. Reserves and surplus are there. This should be closed and transferred to the equity shareholders account. Okay. So yes, share capital account. Say here by balance brought down, it is 10. We have issued some bonus shares. So I'll say by reserves account 5. And this I will transfer to the equity shareholders account. Our accounting entry over here is share capital account debit right? And we transfer it to the equity shareholders. So we say to equity shareholders account, which is 15. That closes this account. I also have reserves and surplus account, right? Reserves and surplus account. Say here by balance brought down, right? Reserves and surplus by balance brought down is 8. You check the balance sheet. We utilize reserves and surplus to issue bonus shares. So we say to share capital account, right? Share capital account. We utilized reserves of 5, and whatever balance is left, we will transfer it to the equity shareholders account. So we say to equity shareholders account. We are left with a balance of 3, right? So 8 here and 8 here. That closes this particular account. Now it's time to prepare the equity shareholders account. So I say here to equity shareholders account. This is the final account that I'm going to open in the books of the firm. I say here by share capital account, right? By share capital, check with the share capital account. 15 is the balance that we have in the share capital account. So we say 15 here. Then we say by reserves and surplus. Yes, reserves and surplus account. We are getting 3. Okay. I'll just leave it over here. You can pause the video here if you're still writing. There is a realization account which needs to be closed. So we return back to the realization account. Here the balance is 20. Here also the total should be 20. We are left with a balancing figure of 3. We transfer to realization. So by realization account is nothing but a balancing figure. Okay. So I will close the realization. This will be the balancing figure. So I return back to the equity shareholders account, and in equity shareholders account, I say here to realization account 3. Okay, and I still have one account still open, and that is the shares invest limited. Our accounting entry will be equity shareholders account debit, 2 shares, equity shareholders account debit. So I'll say by equity shareholders account 15. So it will close this account also. And I go to the equity shareholders account now. Right, I say here to shares in Best Limited account 15. Right, total 18, total 18. So equity shareholders account is also tallied. We have prepared the final ledger balances in the selling company. Yes, I'll just give you a full glance of the answer now. This is the ledger of Better Limited. Okay. Yeah, if anything is pending to be written from here, here is the place where you can pause the video and complete your answer. If anything is left in the realization account and the Best Limited account, pause the video here and complete it. This is shares in Best Limited, share capital account. And pause the video here if anything is pending. This is the final reserves and surplus and the equity shareholders account. We have to now prepare the journal of best limit. It's your purchasing company. Nothing is given in the question. Consider it to be amalgamation in the nature of purchase. My first accounting entry over here is business purchase account debit to liquidator of better limited account. This we will record with the amount of the purchase consideration. Second accounting entry will be to incorporate the assets and the liabilities. Fixed assets account debit. Agreed values are not given, so I go ahead with the book values. You go ahead with the book values does not mean that it is amalgamation in the nature of merger. Okay. Going by book values means we have agreed for the same. Fixed assets account debit, current assets account debit. Then leave one line and then record. Leave one line and then record. To liabilities account. To business purchase account. 15. The credit side is short. See, the debit side total is 20 while the credit side total is 17. So credit side is short. We will say to capital reserve account. It's your balancing figure. 3. Okay. If the debit side was short, it would have given rise to goodwill. The third accounting entry is to settle the purchase consideration. So liquidator of better limited account debit. 15. We are issuing our own shares. So we said to equity share capital account. We are ready to issue 0.1 lakh share and our face value is 100. Right, equity share capital will be recorded at face value and whatever extra is there, I will let it go to securities premium account. 5. These are the main ledger, these are the main journal entries that we are supposed to. If you're still writing, you can definitely pause the video here and complete your answer. But it is still not the end of the journal. These are the main accounting entries. Yes, now we will have to take care of that information D, which I had said we will return back at a later stage. Right, so yes, this is now what needs to be discussed. Accordingly, the accounting entries have to be recorded. See, liabilities of better include 1 lakh due to best. So this must be lying in the current liabilities and also in the current assets. So the two should be set off against each other. See, one company will show debtor, another company will show creditor. Earlier, best and better were two different companies. If you are two different companies, you can show the balances. But now the two companies are becoming one single company. The moment better and best become a single company, you cannot owe money to yourself. See, it's very much natural, right? As long as I am doing separate business and you are doing separate business, I can say that, see, you have to pay me 1 lakh rupees. But the moment the two of us join hands and we say that we are a single company, now as a single company, I cannot say that I have an obligation to myself, right? You cannot have an obligation to myself. So we have to eliminate this. Eliminate it from the liability side, also eliminate it from the asset side. Liability has a credit balance, asset has a debit balance. So liability will be debited and the asset will be credited. And automatically this 1 lakh will be removed. Right? Fine. So that was a case of mutual obligation. Now there's also one more thing. Because these two companies are doing transactions, and out of this transaction there are certain goods which are lying in stock. Okay, there are certain goods which are lying in stock on which we have made profit. Again, understand, earlier best and better were two separate companies. So one company was selling to another company and booking profit. Now best and better have become a single company. Now you cannot sell to yourself and book profit. I hope you get my point, right? So earlier there were no problem. There were two separate entities. If there are two separate entities, they will do transactions with each other. Fine, one company will book profit. Agreed, everything is fine. But the moment the two companies become single company, you cannot sell to yourself, right? You cannot sell to yourself and book profit. So this profit has become unrealized. And because the profit is unrealized, it has to be eliminated. When you eliminate the unrealized profit, you will debit goodwill or you will debit capital reserve. In this question, you are having capital reserve, so capital reserve will be debited. By chance, if there was goodwill, then goodwill would have been debited. I have to simply work out how much of the profit is unrealized. They are saying it is 25% of cost. So cost is 25. Sorry, cost will be 100. Just a second. Cost is, they're saying 25% of the cost. So cost is 100. On that, profit is 25. So 125 is the selling price. So it is something like this: selling price and the profit. Selling price is 125, profit is 25. Then if the selling price is 50,000, how much is the profit? So 50,000 is to be multiplied by 25 by 125. Actually, we will take 0.5 because figures are to be expressed in lakhs of rupees. So let's complete this portion of our ledger. Just take care of the current assets and the current liabilities. So I say current liabilities account debit 1 to current assets account, right? I'm taking care of the mutual obligation. The final fifth unrealized profit, say capital reserve account debit 0.1. Okay, can show in brackets 0.5 into 25 by 125 to current assets. Actually, it is to stock, but then they have not given us any separate figure of stock. So that's your journal. These are the accounting. I'll show you the entire journal. Okay, journal of best. If anything is pending here, just pause the video here and have a glance at the journal that you are preparing in your notebooks. Anything is pending here. Look, I have not given the narration. I am 100% sure that you can write the narration, right? So that is the reason I have not put the narration. In exams, you should write the narration. And now they wish that we prepare the balance sheet. Okay. Balance sheet of Best Limited as on 1st April 20x1, right? This amount figures are in lakhs. Let's prepare the format of the balance sheet and it with the say equity and liabilities. Say one, shareholders funds. And we say A, share capital. Show that by way of a reserves and surplus. That also by way of a say 2. Proper breakup is not given, so I simply say liabilities. Okay, current liability is non-current. It's not that clear. Say liability. Do a line by line addition. Refer the question and do a line by line addition of the liabilities. It turns out to be 22, isn't it? But there is a mutual obligation which we have eliminated, right? 21. Total. Leave it blank right now. We don't have the total. Time for the assets now. Under that, the first head, non-current assets. Under that, we say property, plant, and equipment. Property, plant, equipment. 40. We have investments, line by line addition. 5. See, what I'm really doing is I'm just referring the question, and based on that I'm preparing the balance sheet. See, these are the figures which are there. So what I'm doing is I'm doing a line by line addition. Liabilities is what I did, 20 plus 2, 22, and then the mutual obligation I'm eliminating. 25 plus 15, so that's how I get 40. 5, so I put 5. I'll do 20 plus 5, so that will turn out to be 25. Okay, that is how I'm preparing over here. So I said 2 current assets, line by line addition is 25. Mutual obligation is to be eliminated. Unrealized profit is also to be eliminated. Total. Asset side total, I am getting 68.9 lakhs. Saying see notes. Fine, let's check with the notes. First note is relating to share capital. Okay, share capital. Purchasing company is having 0.2 lakh shares. We have issued another 0.1 lakh shares. So 0.3 lakh shares, the face value is 100. So share capital is 30. The moment you get the share capital, you should return to the balance sheet and we write against share capital against note 1. And the final second note is relating to reserves and surplus. Whenever you are preparing this note of reserves and surplus, you should ask yourself, are there any reserves other than that you are showing in the balance sheet? Do we have any reserve other than the balance sheet? Yes, we do have. We do have capital reserve, isn't it? So we have capital reserve. In the journal accounting entry, it is 3, and then we eliminated some unrealized profit. So 2.9. We have another reserve in form of securities premium. When we recorded the accounting entry, we had that 5. And then we say others. This will come from the balance sheet. Take the figure of purchasing company. I get 17.9. So reserves and surplus, I take over here 17.9. Okay. So 30 plus 17.9 plus 21, 68 point. The completion of the balance sheet. So anything to be written from here, pause the video here. I'll show you the full asset side now. If anything is left to be written from here, you can pause the video here. And finally, the notes. Anything is left here, pause the video and complete. This brings us to an end of the solution of the question.